Okay, a very good evening, everyone, and thank you for joining us for today's coaching session by Mr. Ragesh on financial management strategy. Okay, and welcome to all our participants. Thank you for being on time, and also thank you for your full commitment. So far, we have already completed 2 training days, and this is our 3rd coaching session. So thank you all so much. Every class you guys have participated fully and fully participated. So thank you all so much. All right, I'm just going to I'm gonna mute everyone if you don't mind. Where's the mute button? I'm just wondering where's the mute button for. Okay, it's 8 p.m. All right, we can already get started. So a very good evening, everyone, and once again, welcome to today's session. Okay, I have a question for everyone. A question that is related to today's topic. So saya nak kamu semua tutup mata sekejap, tutup mata. Okay, tutup mata dan saya nak kamu semua bayangkan sekiranya kamu esok bangun pagi je, cek dalam bank, okay, dekat ATM, cocok kad ATM, tiba-tiba dekat dalam bank tu, account balance tu ada 10 juta ringgit. Okay, 10 juta ringgit. Boleh tak bayangkan? Okay, mungkin ada kesilapan lah, orang transfer duit tu. Someone accidentally transferred 10 million ringgit into your account. Okay, so now my question is, what will you do with that money? Anyone unmute and answer me. Anyone wants to answer, just unmute and answer. What would you do?
Donate a portion of it lah.
Sorry?
Donate a portion of it.
Don't donate a portion of it. Okay, all right, good. What about the rest? What would you do with the entire 10 million ringgit? I mean, of course, you check and see lah. Anyone, you check with the bank and all that. And then the bank also says, we don't know who transferred or how it got there. But since no one claimed the money, so the money is yours lah. Technically, 10 million ringgit is now belongs to you. What would you do with the money? Anyone? Apa kamu akan buat dengan 10 juta ringgit tu?
Business expansion.
Okay, business.
Investment.
How much to business expansion? How much for investment?
I think 1/3.
1/3?
Yeah, 1/3 goes into the investment, 1/3 goes into expansion, and then the other 1/3 saving.
Saving, okay, alright, very good. Anyone else? Ada lagi siapa? Macam mana kamu akan membelanjakan duit 10 juta tu?
Bitcoin.
Bitcoin. The whole 10 million going to Bitcoin.
Yeah, for sure.
The 100%.
Yeah, because it's going to the moon, man.
Oh wow. Okay.
I mean, just my point of view lah, because it's free either ways. I mean, right?
Okay. Hey, thank you for your. Thank you for
I will invest in. I'll first allocate some money for some corporate CSR.
Okay, corporate social responsibilities. All right, very good.
Yeah.
Very good. Some more, the rest.
Good.
The rest. What about the rest?
It's a portion only, not all.
Oh, okay, a portion lah. Okay, very good. What about the rest?
Clear debt.
Lim gotong.
Sorry? Okay.
Invest dalam company yang dalam kelas ni.
Okay, invest. Right. So some of you invest. Okay, today's topic is exactly that. It's about managing your finances by doing budgeting. Okay, so if you're investing your money into the portion of money into your business expenditure. So how are you going to budget that money? If you're going to invest, how are you going to budget the money for investment? Okay, so and especially for your business, how are you going to create a budget so that you will be able to financially sustain, expand, and be able to grow? Okay, so that is exactly what today's topic is about, because you have seen a lot of people who have made lots of money, but at the same time they have lost a lot of money also because of poor budgeting, poor financial management. Okay, so today's topic is mainly about that, about budgeting, how to create a very effective budget strategy. Am I right, Mr. Ragesh?
Yes.
It's about budgeting today, and so I would like to not waste too much of time, and I'd like to pass the floor to Mr. Ragesh so that he will be able to take you through today's very interesting topic and very, very important topic as well on finance for non-finance people. All right. Okay. So the floor is yours, Mr. Ragesh. Thank you very much.
Okay. Thank you, Alban.
Yeah.
Hi, everyone. Good evening. I trust you all had your dinner early.
Good evening, Mr. Ragesh.
Hi.
You had your dinner?
Yes, I have. What about you?
Yeah, just had. Thank you.
Yeah. Alban is saying host disabled participant screen sharing. Sorry, again? I'm still getting the same message. Host disabled participant screen sharing.
Oh, yeah. The screen sharing, right? Yes. Okay, let me give you access. People, participants can share. Now, are you able to share?
Let me see. Yes. Okay.
You can, right? Now you can share, right?
Yes. All right. Okay, let's start. Okay, so today's topic basically under financial management strategies would be break-even point and budgets. Basically, there's two main topics today. Today, this is the outline for tonight's coaching. We will start with the learning objectives, and then I will introduce you to break-even point. There will be a short video on what is a break-even point, and then I will explain how the break-even point is computed. After which we will do some class exercises. There are about 3 exercises. One of those exercises all of you have to do as participants. The other 2 exercises we will do it together. Basically, I will show you how to calculate a break-even point, and then you try out, and then there will be another exercise. After which I will then explain about budgets, what a budget is all about, and what are the factors to consider when we prepare budgets. And after that, what I'll do is I will give you a demonstration of how to prepare a budget and a cash flow projection. Just a simple budget and cash flow projection. Nothing too complicated, because I know you guys are all not finance people. So I've kept it a bit simple so that not to confuse all of you too much on that. Okay, let's move on to the next slide. So what are the learning objectives today? So firstly is we're going to learn how to compute the break-even point. And the other main learning objective today is to learn how to prepare a budget and cash flow projection. Okay, let's start with a break-even point. So what is a break-even point? So let me just show this video. Play this video. You'll listen and watch the video for a while.
When it comes to starting a business, achieving liftoff can be exhilarating. However, it's also when the journey can be the most perilous. Immediately after launch, the business is working just to stay afloat until the point you know you're in the clear. But what does that mean, and how will you know? It's called break-even, and put simply, it's the point at which a business is neither making a profit nor a loss. Rather, it's momentarily floating in limbo. The break-even point is the total amount of sales a business needs to achieve before it starts being profitable, Or more technically, a business's fixed cost of production, like rent, divided by how much you sell the product for, minus the variable costs per unit sold, like ingredients or materials. How much you sell the product minus variable costs is usually called your contribution margin. Confused? Don't worry, here's an example. Let's say it costs Pizza Planet $8 to make one pizza, and they sell the pizza for $12. That means their contribution margin is $4. So, if Pizza Planet's only fixed cost is $500 rent, to find out the number of pizzas they need to sell to break even, they simply divide the rent by the contribution margin. This means they need to sell 125 pizzas, and any pizza sold after that would contribute to the company's net profit. So, you can see by conducting a break-even analysis, a business is able to determine the price of a product, how many need to be sold, as well as identify and potentially reduce excessive fixed costs, ultimately allowing a business to reach profitability and beyond.
Okay, you just saw the video just now. Explained the break-even point quite clearly. Maybe I will go through again points that was raised at during the video. So first, the break-even point is a point when the company makes neither a profit nor a loss. So it's, like they said in the limbo, it's neither making a profit nor a loss. Okay, how do we calculate the break-even? So if we saw the formula just now, break-even point is equivalent to fixed cost over unit contribution. Or they call it contribution margin. You can call it unit contribution or contribution margin. And what is unit contribution? So unit contribution is arrived at by taking the selling price and lessing the variable cost per unit. Okay, now the question here is, what are variable costs and what are fixed costs? I think the video briefly explained what are variable costs and what are fixed costs. But let us go into more detail as what is each of these, what are variable costs and what are fixed costs. So variable costs are costs that varies according to production or sales. So basically these are costs that varies according to production or sales. For example, a variable cost here includes direct materials, direct labor, or factory overheads. So if you are manufacturing something, so your variable cost would be your direct materials, means your whatever materials you use to manufacture your goods. Direct labor could be your factory workers who work at your factory. And factory overheads.
Excuse me, Mr. Rajesh.
Yes.
Does electric and water is variable cost as well?
Yes, that's under factory overheads. So when you run your electricity, water for your machinery and all that, for example, so that will be considered as a variable cost. Because when you don't have a production, your machine will be closed or shut down. So there is then not much electricity or water bill. So electricity, water bill, those are considered as variable costs. They come under factory overheads. Or maybe like your maintenance of your machinery. So anything that's related to either production or sales in this case. Those are considered
okay, regarding the maintenance, say that the maintenance of the machine, the price is still the same. For example, does it considered as variable cost as well?
If it's fixed, they say maintenance of the machine is, for example, under a contract by a third party, and then you have a sign of fixed contract to recall it, maintain your machinery for the whole year, and then becomes a fixed cost. So only if it is a variable cost, where, for example, you are using a machinery and you need materials to clean the machinery, whether it's like those days. I mean, when I was in the staff for the printing press, they call it industrial cloth, right? Cloth. They use this cloth to clean the printing presses, for example. So those are variable costs. They are consumable that you only use for the running machinery. So those kind of costs are variable.
Okay, so Mr. Ragesh, can I just ask a question on behalf of the participants?
Sure.
So like now we have a diverse group of participants who are, some of them running business consultancy companies and some of them are running logistic companies. So what about them? Of
Yes,
course,
that's
we don't, the term is different, right?
We're coming to that, the next point. This is
Okay.
first point is on
Factory.
those are running factories. So these are the variable costs.
Oh, okay. All right, sure.
Production side. Basically, we are producing goods.
I see. Okay.
Just bear in mind what you see here. Just remember the direct materials, direct labor, and factory overhead. The reason I'm asking you to remember this is because later on in an exercise, you will need to calculate the variable cost. And these are the factors that make up variable cost. Remember direct materials, direct labor, and factory overhead. Come to the next point.
In that case, can we summarize it as just cost of goods?
Yes. So you look at the second point. So for those who are running retail and services on it, basically your variable cost is actually your cost of goods, like what you said, right?
Goreng biasa boleh, telur mata. Mi goreng biasa boleh, telur mata.
So your cost of goods and services sold, so that will be your variable cost. So in the event like you're selling, for example, you're selling clothes, apparel, for example. So the cost of buying those apparels, because if you're in a retail business, you basically buy and sell goods. So the cost of buying those clothes, for example, those apparels, those would be considered as cost of sales or cost of goods sold. So that is a variable cost. Because if you don't sell anything, you don't have to buy those apparels, for example. So you don't incur that cost if you don't sell it. So that is a variable cost where it varies either according to production or sales. Okay, so clear so far, everybody? So you got two types. For manufacturing, you have the direct materials, direct labor, and the factory overheads. For the retail side and services, you have the cost of goods, cost of sales. Okay, so that's variable costs. So what are fixed costs? Fixed costs are costs that do not vary with production or sales activities. Some examples of fixed costs like rental of premises, staff salary or admin staff salary, and all your management staff salary, even your sales staff and all that, those who are fixed in nature. So those are considered as fixed costs. Office utility and telecommunication costs, any other costs that is like the office utility means the water, electricity, or your telephone bills and all that. So these are all considered fixed costs. Okay, is that clear? Next, let's look at an exercise on break-even point. Okay, so in this example, BBB Sindamahat sells vacuum cleaners at 200 ringgit each. The variable cost is 80 ringgit each, and their monthly fixed cost is 200,000 ringgit. So what is their monthly break-even sales units? Okay, so remember this is the formula for break-even point. Break-even point is, what is break-even point? Do you all remember?
Fixed cost.
Fixed cost over
unit contribution.
Yes, correct. Fixed cost divided by unit contribution or contribution margin. Yeah? Okay, so you can see the fixed cost here, right? What is the fixed cost?
200,000?
Yes, that's right. So what about the unit contribution? So unit contribution is equivalent to the selling price minus the variable cost. So
120.
120, yes, that's right. So you take the 200 ringgit selling price, you minus the 80 ringgit variable cost, you get 120 ringgit. That is your unit contribution. You see here the...
Yeah, 1,000.
That's right. So break-even sales unit is your fixed cost, which is your 200,000 ringgit, divided by your unit contribution. And your unit contribution is 200 ringgit, your selling price, minus 80 ringgit, your variable cost. So you get 1,667 units. So that means if BBB sells 1,667 units, they make neither a profit nor a loss. If they sell more than 1,667 units, just say they sell 1,700 units, then BBB starts making a profit. And if they sell below 1,667, they say what they only manage to sell 1,500 units, then BBB makes a loss. That's why you see it's important to find out what is your break-even point, so that you know how much you need to sell, so that you can break even. Okay, everyone is clear here? Any questions here?
Very clear, Mr. Rakesh. Thank you.
Okay, so now we're going to the exercise. So this exercise, I'm going to show you. Okay, this is a class exercise which all of you need to do. So let me read out first. So ZYZ Sdn Bhd manufactures and sells rice cookers. It sells the rice cookers for 100 ringgit each. The direct materials cost is 20 ringgit each. The direct labor cost is 15 ringgit each. And the direct factory overheads is 5 ringgit each. Its fixed cost is 250,000 ringgit a month. So you all need to compute the break-even sales. So remember this one we talked about variable cost. So remember which is the variable cost. And the selling price is there, which is the variable cost, and also you got the fixed cost. Okay. Shall I give you all? Do you need any more guidance before you calculate the break-even sales?
Fixed cost is 250.
Okay, so maybe I give you all 5 minutes. Is it 5 minutes enough to calculate? Think about which is the variable cost. But the thing is, the variable cost here, this question, not like the previous question, because the previous question I already stated straight away the variable cost. But here you need to calculate the variable cost a bit. You need to remember. So I remember I asked you to remember what was the variable cost on the earlier slide. So you need to calculate the variable cost. The fixed cost is quite clear.
Tuan.
Yeah.
Ada soalan.
Yeah.
Boleh kasih terang saya sedikit dalam bahasa Malaysia?
Boleh. Jadi
itu
ini
black.
Ya, okay. Ini latihan ni. Syarikat ni ZYZ ni dia membuat nasi ni rice cookers lah. Jadi dia jual rice cooker, harganya RM100.
Okay.
Jadi dia punya direct cost, direct material ni dia punya bahan-bahan lah, bahan-bahan untuk buat ini rice cooker ni, dia punya bahan-bahan costnya RM20 untuk satu. Punya direct labor itu upah untuk pekerja di kilang semua. Itu costnya RM15 untuk satu rice cooker lah. Dan
RM19.
Apa tu?
Material cost.
Dia punya overhead RM5 untuk buat satu rice cooker. Dan dia punya fixed cost yang tetap lah. Itu RM250,000 sebulan lah. Okay. Jadi tadi listener ada ingat kan macam mana kita nak calculate tu break even point kan? Mana kita ambil
ya macam
cost. Fixed cost dan
XYZ ni kan dia punya jualan contoh 100, kos dia 20, upah dia semua. Lepas tu dia punya dia punya modal begitu kah?
Dia punya cost tetap tiap-tiap bulan RM250,000.
200 berapa?
RM250,000 sebulan lah. Dia punya cost tetap macam dia punya rental, dia punya apa ni? Sewa kilang, sewa office, dia punya gaji pekerja-pekerja lain semua.
Itu sudah total.
Dia punya office punya cost lah. Dengan mungkin dia punya sales, dia punya ada sales staff kan, ada yang nak jual semua. Itu semua RM250,000 lah bulan. Sebab itu semua cost tetap.
Ini cost dikira cost tetap lah.
Yang cost variable yang bertukar pada mengikut jualan dan production kan, itu yang dipanggil variable cost lah.
Okay.
Jadi kena campur sekali. Mana yang variable cost tu kena campur di ketiga barang. Variable cost lah.
Okey Kak Christina.
Saya tengok dulu.
Aku kasih translate cakap bahasa Sabah kah?
Ya, ini kan saya baca di sini dia cakap di sell the rice cooker is 10.8. Okey, itu dia punya jualan lah. Lepas tu direct material dia 28. Direct cost 15.8. Direct furniture overhead 5.8. Lepas tu kos tetap dia 250 sebulan.
Yeah.
Jadi macam mana kita mau tahu dia ni boleh untung ataupun tidak?
Ya, berapa dia kena
kita
jual?
Kita tolak semua kah itu?
Ya, berapa rice cooker dia kena jual supaya dia dapat
balik modal.
Balik modal lah.
Oh, begitu. Berapa banyak dia harus jual nasi lemak.
Rice cooker tu dia kena jual lah. Berapa dia kena jual. Untuk dapat tak ada profit, tak ada untung, tak ada rugi lah.
Itu break-even point tu dia maknanya tidak untung, tidak rugi.
Tidak untung, tidak rugi.
Oh ya. Tidak untung, tidak rugi. Ya, biasalah tuh. Contoh dia punya jualan tuh harus berapa dia harus kejar lah untuk cover dia punya kos tetap batu kan.
Betul. Berapa dia kena jual setiap bulan lah.
Oke, kita mau tahu lah berapa harus dia jual lah di sini.
Jadi ingat dari formula saya tunjukkan. Yang formula dia fixed cost dibagikan pada unit contribution.
Oh, fixed cost bahagi unit competition. Fixed cost tu ya.
Okay. Unit contribution tu is
ambil
harga jualan tolak harga untuk barang-barang yang barang tu kata variable cost lah. Dia kan ikut production atau sales.
Maksudnya harga jualan tolak dengan barang belian dan jualan lah begitu.
Barang belian upah semua lah. Ya, betul.
Okey.
Dapat unit contribution dan lepas tu ambil fixed cost bahagi dengan unit contribution.
Oh, bagus so kalau ada papan hitam. Tuan boleh tunjuk kami kan?
Ya, memang saya akan tunjuk nanti sekali.
Mr. Rajesh?
Yes. Got the answer.
Ya, bagus kalau ada tulis-tulis supaya kami paham kan. Saya paham juga tapi mau lebih detail lagi lah kepahaman dia.
Okey, saya faham.
Labor cost is not a fixed cost ke?
Pardon?
Labor cost. Labor cost is not wages kan?
Labor cost here means the factory workers cost.
Well, it's not a fixed cost. It's a variable.
This considered a variable cost. That's right. It's variable according to the number of units you produce, basically.
I see.
They have calculated how much is it for each, how much labor you require.
Sorry.
So what's the answer?
You already ready? Anybody going to say the answer first?
I got 4,167.
Okay. Anybody else will answer?
3,846.
Dia perlu ada formula ben ni tuan kan baru kita boleh tahu semua macam mana untung, macam mana rugi.
Betul. Nak tengok formula balik.
Ya, saya mau tengok dia punya formula bah. Formula dia macam jualan tolak hasil macam mana proses.
Ini formula ni break even point tadi saya tunjuk. Break even point. Sekejap mungkin saya tutup di sini.
Kejap tuan, saya tulis dulu. Tidak habis saya tadi tulis.
Ini break even point lah. Ini yang formula ni. Ini ya. Break even point fixed cost over unit contribution. Itu yang formula ni.
Jangan dulu padam tuan, saya mau tulis. Nanti saya lupa.
Mungkin tulis formula ni dulu lah. Break even point fixed cost bagikan unit contribution.
So, Mr. Rajesh.
Yes.
Monthly salary for staff, kan? Is it a variable or fixed?
It's a fixed cost for all the other staff, except for factory. Factory workers they consider as variable cost.
Okay, right.
But the rest is considered fixed cost. If it's not factory, then that is fixed cost.
Okay.
Let me go back to this. Yeah.
Lama. Saya belum salin lagi.
Kejap sudah. Dia formula tadi.
Ya. Kejap tuan. Tinggal sekejap lagi siap sudah. Boleh ulang kata. Saya mau belajar.
Ini yang formula dia.
Kejap.
Ini formula dia.
Saya hampir siap tulis. Kejap.
Fixed break even point tu fixed cost over unit contribution. Itu yang formula dia.
Okey, kejap tuan.
Ya.
Mau kasih screenshot saja Bani, tapi saya punya telepon penuh, jadi tidak dapat.
Okay. Jadi break even point.
Jadi saya terpaksa tulis.
Lepas tu unit contribution ni, ni formula dia. Macam mana nak dapat unit contribution? Selling price less variable cost. Itu cost jualan tu tolak dengan variable cost.
Kos jualan tolak
Variable cost. Cost yang mengikut macam bahan-bahan cost tadi semua upah tu kan. Itu semua variable cost.
Okay.
So answer dia 3,846.
Gaji.
Let me see. Okay, sudah selesai semua?
Sudah.
Sudah. Just remember just now we talked about variable costs. So you got direct materials, direct labor, and factory overheads. These are your variable costs. Okay, let's go back to the question again. Okay, so far I only heard from 2 persons who gave the answer. What about the rest of you? Managed to get the answer?
We look at the chat. Rajesh, we already put the answer in the chat box.
Okay, so all of you got answer? Yeah. Okay. Then maybe I will just show you the answer. Most of you got the answer. Okay, so how do we calculate the break-even point for this? So like I said, the break-even point is equivalent to the cost over the unit contribution. And the unit contribution is the selling price less variable cost. So in this case, your selling price is 100 ringgit. And your variable cost is now was the direct material cost is 20 ringgit, the direct labor 15 ringgit, and the direct factory overheads, which is 5 ringgit. It means all together your variable cost is 40 ringgit. So 100 ringgit, you minus the 40 ringgit, which is your variable cost, you get 60 ringgit. So that is your unit contribution. Okay, everybody understands, sir? All got it?
Loud and clear, sir.
Okay, good. Okay, now let's look at the break-even sales unit. So the break-even sales unit, break-even is the fixed cost over unit contribution. So your fixed cost is 250,000 ringgit. So this now, the unit contribution we just calculated is now it is 60 ringgit. Therefore, the answer is 4,167 units. So all of you got the answer? Let me see let me just what is in your chat. Let me see what's in your chat. Okay, I see most of you okay. Managed to get 4167. Okay. I see most of you managed to get 4167, right? You want to tune out. For those who didn't get it correct, do you now understand how to calculate?
Kalau begitu Tuan, dia kena jual 4.167 unit lah tuh.
Dia kena jual satu bulan dia kena jual 4.167 unit baru dia boleh dapat balik lah. Dan maksudnya kalau dia jual macam ni 4.167 tak ada rugi, tak ada untung lah. Tak ada untung, tak ada rugi lah. The break even point.
Oh. Ya, itu jualan dia kan. Nanti dia darab dengan 100 let tuh. Tidak.
Ya betul. Darab dengan 100.
Dia darab 100 kan?
Darab 100 untuk dapat jualan lah. Jumlah jualan ya memang. Kalau
macam 4167 darab 100 tuh kan Tuan?
Itu jualannya.
Baru kita tolak 25.
Tolak kosong. Okay, everybody okay? All understand? Those who didn't get it right, you all understand now how to get it?
Waduh, banyak yang dijual.
Oh, good.
Yes.
All clear?
Okay.
So now,
begitu 4.000.
we will move to another exercise.
Banyak yang kena jual.
So now, how do we calculate the break-even point if there is more than one product? So this is not the earlier examples, the two examples that we did. There is only one product. So now, What if there's two products? So how do you calculate the break-even point? Let's look at this example. So in this example, why Sindriam Bahat sells two products. Product A is sold at 100 ringgit and its variable cost is 40 ringgit, while product B is sold at 200 ringgit and its variable cost is 80 ringgit. Currently produces about 1,200 units of product A and 800 units of product B in a month. So YYY's fixed cost is 300,000 ringgit a month. Compute the break-even sales units for both product A and product B. Yeah? Let's see, how do we calculate the break-even point when there are more than one product? The first thing you got to do is the fixed cost. Remember, the fixed cost is 300,000 ringgit, right? The fixed cost of 300,000 ringgit. We must first apportion this between the two products. Because there's two production on one product, so we have to apportion it between two products. How do we apportion it? So if you remember some, yes. Questions? Okay. The way we allocate the fixed cost is, just now we saw that they are producing two items, product A and product B. And product A, they produce 1,200 units, and product B was 800 units. So in total, they are producing 2,000 units, right? You take the 1,200 of product A and plus the 800 of product B, you get 2,000 units. The total units produced 2,000. So the amount of fixed cost to be allocated to product A, how you calculate that is you take the 300,000 times 1,200 over 2,000. That means roughly about 60% of the cost should be allocated to product A. So you get 180,000 ringgit for product A. So far, okay, everybody follow me? Any questions at this stage?
May I see the question again?
Early one. Okay, we go back again.
Explain the question.
Okay. So this is a question again. Why is selling two products? Product A is sold at 100 ringgit. Variable cost is 40 ringgit. While product B is sold at 200 ringgit and its variable cost is 80 ringgit. Okay, right. And then it currently produces 1,200 units of product A and 800 units of product B.
So it shows that 1,200 over 2,000 is the unit that they sell, right?
Yes, that's right.
I see. So I was wondering where did the 2,000 come from?
Doesn't come from. You see, add the 1,200 with the 800 because it produces 1,200 product A.
Oh, so actually we do not need to calculate differently from product A, product B. We can just lump sum sekali pun boleh.
Yes, because we need to allocate because the total cost, fixed cost is 300,000 ringgit. So we need to allocate this between product A and product B.
Okay, thank you, Mr. Rajaj.
Understand?
Okay. I was wondering where the 2,000
came from.
That makes sense.
Now you know, 2,000 is the 1,200 and the 800.
Can you please mute?
Let me just mute everyone. Okay.
Right. Okay. Yeah. So that's clear. Now product A allocated cost, fixed cost again, 300,000 times 1,200 over 2,000. So I think you all understand where the 2,000 came from. Huh? So you get 180,000 ringgit fixed cost allocated to product A. So for product B, it's similar. The calculation is so take the 300,000 times 800 over 2,000. The balance is allocated to product B. That means 120,000. So 180,000 for product A and 120,000 for product B. Okay, now let's look at how to calculate the break-even point. So the break-even point for product A, as you know, the break-even point is fixed cost over unit contribution. So break-even point for product A is, as from here you can see from the top you can see the product A's allocated fixed cost is 180,000. So I put the 180,000 there. Get there. And then you have 100 ringgit minus 40. So 100 ringgit is the selling price for product A. And 40 ringgit is the variable cost. See, what I can do is show it here again. See, if you remember earlier, this page, we saw that 100 ringgit selling price, 40 ringgit variable cost. That's why we have this here. So product A's break-even sales is 3,000 units. You take the 180,000 fixed cost, you divide it by the unit contribution of 60 ringgit, so you get 3,000 units. That means you have to sell 3,000 units of product A in order to cover the 180,000 ringgit of fixed costs allocated to product A. And for product B, balance of the fixed cost, that is 120,000 ringgit. Similarly, you divide it by the unit contribution of product B. So the selling price of product B was 200 ringgit. Its variable cost is 80 ringgit. That means its unit contribution is 120 ringgit. So 120,000 ringgit of fixed cost divided by 120 ringgit of unit contribution, you get 1,000 units. So it means for product B, they have to sell 1,000 units of product B in order to cover the fixed cost of 120,000 ringgit. So if they manage to sell 3,000 units of product A and 1,000 units of product B, they will be able to break even. It's no profit, no loss for both. If they only, say for example, in product A, they managed to sell 3,000 units. So they managed, but product B, they only managed to sell 500. So that means they will still lose money on product B and only break even in product A. So in this, from here, you can see that how much, so YYY, for example, knows how much of product A it needs to sell. So it needs to sell 3,000 units in order to break even. Product A. Product B, he knows that it needs to sell 1,000 units, then only he can break even. Okay, everybody understand so far? Okay. Anything I need to go through again? All clear? Celestina, faham ke?
Sikit-sikit. Tuan, itu boleh tanya kah?
Ya. Yang mana?
Itu yang produk E tuh kan.
Ah.
Dia fixed cost 300 tuh kali 2 untuk mendapatkan berapa dia punya jualan batu kan. Berapa unit kita harus dapat lepas kita tolak-tolak cost modal apa semua baru kita dapat dia punya cost. Macam mana boleh kasih terangkan ni nak Tuan?
Produk A.
Saya bala-bala bah.
Okey,
ya,
jadi
produk E kan RM 100 tolak 40 itu yang kiraan menyeluruh lah kan. Jadi dalam
yang mana tak faham yang 2000 kali. 1,200 dengan 2000. Mana saya dapat?
Iya.
Okay.
Maksudnya ini ada 2 produk ini, produk E, produk B.
Ya, kalau tengok ini sebelum ni kan dalam soalan ni saya tulis produk A ada 2 produk. Ini produk A dia jual RM100, dia variable cost-nya RM40. Produk B dia jual RM200 dan dia punya variable cost RM80. Jadi dia karena ini dia membuat 1,200 produk A dan mengeluarkan 800 unit, keluarkan 1,200 dan 800 unit produk B. Jadi bila kita campur 1,200 dengan 800 unit ini baru kita dapat semua sekali 2,000 unit yang dikeluarkan dalam satu bulan untuk produk A dan produk B sekali. Faham? Dia punya cost tetap ni 300,000 lah sebulan. Jadi sebab tu bila kita tengok sini dalam saya tunjuk sini kan 2,000 ni sebab kita campur 1,200 dengan 800 ni. 1,200 dengan 800 baru kita dapat 2,000. Jadi itu kos tetap ni 300,000 ni kita kena bagikan lah antara produk A dengan produk B. Cara kita bagikan guna formula ini. Faham cerita Rizal?
bala-bala juga lah. Tapi biasa juga lah buat macam ni. Tapi kalau belajar pula susah pula.
Okay, faham.
Dia punya apa? Dia punya unit sebulan tuh kalau yang produk A kita kena jual dia 3.000 unit betul kan?
Betul. Pada A
Kali dengan kita punya sale lah.
Dia punya RM100 lah dia punya jualan lah. Harga jualan RM100 ya.
Dia punya jualan 100 gitu, satu benda ataupun macam mana?
RM100 ya, satu benda RM100 untuk produk A. Untuk produk A punya jualan, harga jualan RM100 untuk satu produk. Untuk produk B harga jualannya RM200.
Contohlah satu gelang tuh RM100 lah begitu.
Yes, satu unit lah.
Jadi dia kena jual 3.000 unit lah macam tu.
Yes, betul.
Kalau ini produk A dengan produk B ini kalau sudah dicampur, ditolak apa semua, tengok dia untung kah, rugi kah, ataupun dia tidak rugi, dia tidak untung.
Yes, kalau dijual 3.000 unit A dan 1.000 unit B, dia tidak untung, tidak rugi lah.
Habis kan ini kan dia macam target bah. Kadang-kadang itu target kan tidak capai juga. Kadang-kadang capai atau lebih begitu kan?
Iya betul.
Tapi ini mesti target kita tetaplah 3.000 begitu. Contoh lah 3.000 unit dan 1.000 unit tuh kita harus kejar itu juga kan?
Betul, untuk sampai untung tidak rugi lah. Kalau tak sampai 3.000 dengan 1.000 unit ini, dia akan alami kerugian lah. Mengalami kerugian.
Gitu. Ya, paham Tuan. Jadi dia rugi teruk tuh.
Kalau melebihi dapat untung. Kalau jual lebih
iyalah kalau lebih memanglah. Jadi kalau begitu kita kena ada target setiap bulan lah kalau begitu kan Tuan?
Ya betul. Nanti saya akan cakap
kalau
tentang
dalam
budget.
jualan kita.
Nanti akan jelaskan lagi dalam budgetnya, target semua. Okay, everyone else?
Formula ini. Okay.
Faham?
Mr. Rajesh, saya masih ada masalah dekat ni ya, yang contohnya macam fixed cost untuk soalan tadi kan, macam fixed cost is RM300,000 sebulan kan. Saya masih tak faham, maksudnya dalam 300,000 tu fixed cost yang macam mana?
Dia macam rental misalnya, mungkin salaries untuk pekerja-pekerja semua. Rental untuk kilang.
Modal pun dia ke? Modal
ini kos tetap setiap bulan. Misalnya kena bayar apa ni rental, sewa kan, sewa
gaji pekerja yang tu je lah.
Sewa kilang dengan sewa office, gaji pekerja-pekerja office semua, gaji pekerja sales. Apa-apa kos lah macam electricity, water bill semua, telefon. Mungkin ada promotion cost ke A&P ke, marketing cost. Maintenance, apa-apa kos yang tetap lah, yang kena bayar tetap setiap bulan kan. Itu yang fixed cost lah.
Memang yang tu je lah, memang semata-mata yang tu je. Okay, terima kasih.
Faham? Okay, everybody else okay? Baik. Okay, now we move to next topic. We move to is budgets. Okay, so what are budgets? Basically, budgets are estimates based on actual and trend and performance. So basically, when you do a budget, you actually look back at your actual trend and performance in order to do the budget. And budgets are important as it gives management the guide it needs to plan business activities. So basically, budget is a planning and control tool, because you set your budgets to achieve a certain target. Then you monitor whether you are on target to achieve the targets that you set. You monitor your performance. That is the idea of the budget. You set the target and then you monitor the performance. And budgets basically help businesses to plan how much cash is needed to fund the business, or how to manage its revenue and expenses. That's mainly the reason why we prepare budgets. They just wanted to know for info, how many of you actually prepare budgets every year? Do you all prepare annual budgets?
Yeah.
You are? Okay.
Yes.
So that's good. That's an important part of planning. control. Management normally requires budgets to be tracked, means actual performance, to see whether the business is on track to achieve its goals and objectives. I remember I mentioned this number being used as a tool for planning and control. So basically, when you set the budget, because management, this is obviously all of you, because you are the business owners. When you set the budget, when you get your finance team to prepare the budget, for example, once it's approved, then you need to make sure the budget is tracked every month. So you will probably get your finance team to give you some kind of variance analysis. It means they will give you the performance of the month, actual versus budget. And also I'll get them to explain. For example, if the sales is down, why is the sales down this month? What are the factors that affected sales? Similarly for expenses, it's above budget. Why is it above budget? Or even if it's below budget, especially if it's significantly below budget, then there is something that also raise a flag. Why is your expenses so much lower than your budget? Maybe you have missed out something. Or it could be a timing difference. It means you're not going to incur this month, you're going to incur next month. All this, as the owners, you have to make sure that you get your finance team, have a finance team, make sure they give you this information. Of course, if you are doing it yourself, then you have to monitor your performance. Later on, I will show you the format of the budget that you can use. So budgets are normally prepared annually, and it is best to revise it during the year to incorporate any changes in business and economic environment. That means when you prepare a budget, when it comes to the following year, you should look and see whether the budget needs to be revised, because some conditions could have changed. This year, of course, it was like COVID-19. In fact, most companies this year, I think the budget is out. Within the first quarter, all gone. Because the COVID-19 came in and disrupted all the businesses. So whatever budget that you prepared last year, I'm sure you couldn't use this year anymore. So by the first quarter of this year, I think you all had to revise your budgets and come up with a new budget. So that's the idea of a budget. It has to be dynamic. Make sure you revise your budgets periodically when you do your budgeting. Okay, some of the typical budgets that companies use. One is called a traditional budget. It is done annually towards the end of the year for the following year. So these are traditional budgets. But these budgets normally, very seldom people do traditional budgets, because traditional budget means they don't change the budget throughout the whole year. Whereas most of the time it is best to revise your budget, because all the factors, the business conditions could have changed during the year. Another type of budget is called rolling budgets. That is, the budget is originally done towards the end of the year for the following year, but is then subsequently updated. So rolling budgets can either update it every quarter. That means what every quarter means, when you come to first quarter, you got 3 months of actual, and then you got 9 months of budget. And then you have to assess at that point whether the business conditions have changed or economic environment have changed, and whether the budget is still relevant. If the factors have changed too much, then you may want to get your finance team to revise the budget. Or some of them do it at the midterm level. You can either revise the budget every quarter, or you can then revise it maybe once or twice a year at the midterm level. When I was in the Star, we used to revise it first quarter and midterm. But after some time, we also changed our practice and only revised it once a year. That means only that midterm we revised it, because we felt that first quarter maybe it was too soon to revise the budget, unless there's some kind of event that was totally unexpected, like COVID-19, for example. So there was no choice. Then you have to revise the budget, because the budget no longer is applicable. Otherwise, you can revise the budget at midterm. So midterm means you have 6 months of actual. Then the second half, you relook at all your assumptions on how you did the budget. And it could have all changed at that stage, because the economic environment could have changed, the business environment could have changed. So then you revise the budget for the second half. That is the recommended practice when you do budgets. Another type of budget, they call it rolling forecast. So under a rolling forecast, you got 4 quarterly moving forecasts. Basically, you got 4 quarters. You always have 4 quarters going forward. And it is updated regularly every quarter. Actually, the way to do rolling forecasts, what they normally do, rolling forecasts, which is quite popular among multinationals. You actually have 8 quarters. 4 quarters in the past and 4 quarters moving forward. Then every quarter you keep dropping one quarter, out of the 4 quarters in the past, you drop the last quarter and you add another quarter. So every time there's 8 quarters, 4 quarters going forward, 4 quarters behind. This is a very good planning tool, the rolling forecast. And that means every quarter you actually revise the forecast. Because the business could be in a very, especially those business in a dynamic environment where it's changing regularly. Then you can also see the trend. If you're using a rolling forecast, since you're using an 8 quarters moving average, moving forecast, you can see the trend. Past 4 quarters and what is it going to be the next 4 quarters. That's called a rolling forecast. Okay. Another type of budget is called zero-based budgets. So zero-based budget is where the budget is set to 0 and every item of expense is then questioned and analyzed to justify whether it is necessary. So this kind of budgets normally is very useful for cost-cutting measures. You want to cut your costs and set everything back to 0. So under a zero-based budget, what you do is you sit down with every department head that you have, for example, and you set the budget back to 0. And then you ask that person to justify every expense. So say, as you go through every expense, for example, salaries. Okay, why do you need salaries? Oh, I need all this stuff. Okay, we can justify he needs that many stuff. Okay, fine. If he's not able to justify that he needs that many stuff, then you cut the budget. You say, no, I can't have that much. Whatever expense it is, can be any expense, stationery, material costs, maintenance or whatever. So every item, you question the expense. And you remove the expense if the department head is unable to justify the expense. So these kind of budgets are normally done during crisis time when you want to cut costs, business is not doing well. And this is one of the ways you can cut costs by using a zero-based budgets. Zero-based budgets is also used by a lot of government organizations around the world. And but the UK government is one of the first to introduce zero-based budgets. So zero-based budget is used for cutting costs and managing costs. Okay, everybody okay at this stage? Any clarification required? The types of budgets?
Mr. Ragesh, just a question on the rolling budget and rolling forecast.
Okay.
So, well, to me, it looks the same. Pretty much is one is either done on a quarterly or midterm basis, or the other one is done on a quarterly basis. But I noticed that one is called budget, the other one is forecast. So does the rolling forecast is only on revenue forecast, or how do we differentiate these two?
Normally, rolling forecast can be done on revenue. In fact, it can be done on any expenses if you want. But normally, rolling forecast, what they do is they will do on revenue, cost, and profit or loss. Normally on a total basis, the rolling forecast is done.
So it doesn't focus much on the operational costs.
It doesn't go too much into details.
So whereas the rolling budget is overall, it covers everything.
Yes, very detailed. Whereas the rolling forecast, most of the time people do a rolling forecast, they do it on a chart form. Then they will plot the revenue line. They will plot the total costs, and then they will plot the profit or loss. So you see it over 8 quarters.
Okay.
So that's how they do it. So then you can see a trend. What you can see from there is a trend of how your past 4 quarters are going. So from the past 4 quarters, you will know which direction your next 4 quarters are going to go. That's the idea of the rolling forecast.
Like for my existing company, what we do is we do a rolling forecast, like what you have just suggested, but it doesn't touch other aspect of the budget. So it only touches on the revenue. Every quarter we actually revise the revenue.
Yes, a lot of companies do that. Yeah, that's true. Can also do it just for revenue.
Yeah, so that's why I was wondering if the rolling forecast was only focuses on, the rolling forecast only focuses on revenue, sales revenue.
Yes, you can do that, but not necessarily.
Not necessarily.
Not necessarily.
Okay.
I've seen a rolling forecast where it's all three, the revenue, cost, and profit.
Okay, all right, thanks.
Any other questions? Yes. Okay. Shortly, we'll have a break. Let me just finish this maybe first. A bit more ago. Okay, so what are the factors?
Tuan, boleh tanya?
Yeah.
Itu budget, belanjawan kan?
Belanjawan.
Okay. Nah, belanjawan ni datang dari mana? Datang daripada kita punya macam dana kah ataupun daripada kita punya sale yang lepas tahun ini kah ataupun macam mana?
Belanjawan ni kita buat untuk tahun depan. Kita buat belanjawan
Jadi
tahun depan.
ya, kita buat tahun depan, tapi belanjawan tu hasil daripada sale kita yang tahun ini kah ataupun macam mana?
Bukan, dia belanjawan tu kita kena buat untuk tahun depan, dari hasil tu dari tahun depan punya sale lah, dengan tahun depan punya cost. Tapi kita tengok kita punya sales dan kita punya cost tahun ini. Lepas tu kita agak-agak lah, berapa kita akan jual tahun depan, berapa kita boleh jual, dan berapa dia punya cost, sama tak ataupun naik dah cost.
Okey, dia punya perancangan lah, lebih kurang belanjawan ni
perancangan,
kita
betul,
perancangan lah.
Perancangan perniagaan tu lah, berapa nak jual, berapa kita boleh jual tahun depan, berapa kita cost, sama ada sama dengan tahun ni ke, ataupun mungkin naik ke, turun ke, macam tu lah.
Okey, Tuan.
Faham?
Okey, faham.
What are the factors to consider when preparing a budget? So one is the economic environment, both locally and globally. So when you do the budget, you need to consider the economic environment. So if the economic environment is good, then maybe you can forecast a higher sales. But if the economic environment is bad, that means it's going to go into a recession, for example. Then your sales, you have to be careful when you project the numbers, because you don't want to project numbers that are very, very optimistic, but then your economic environment is very bad. So you need to achieve, because you have to make sure your budgets are realistic and achievable. So these are some factors you need to consider. What is the economic environment you are operating in? Secondly, if your company has got a lot of transactions in foreign currency, then you have to consider the foreign exchange rate. Make an assumption of the foreign exchange rate. So what would be the foreign exchange rate for the following year? Just say the US dollars exchange rate, the ringgit maybe is 4.07 or 08 this year. Then you have to make an assumption for next year. Will it be the same? And if especially we have a lot of transactions in foreign currency. So make sure that you estimate quite a reasonable exchange rate now. Of course, nobody can predict what will be the exchange rate. But do not make sure that the exchange rate that you use is not outdated. It's the latest exchange rate. Then you must also consider the industry in which you're operating in. How is the industry doing? Is it doing well? Is it not doing well? For example, last time in the media industry, for example, overall the media industry was not doing well, for example. So just say if we were doing a budget and it was for print, for sale of newspapers. So obviously we can't project, for example, the sale of newspapers, the sale of increase of 10%, for example. Because in the past few years, the newspaper sales have been dropping, and the newspaper industry overall has been dropping. So maybe it's been dropping 15, 20%, for example. So you can't go ahead and next following you go and project a sales increase of 10%. So that doesn't make sense, because the industry is going in another direction, and you are projecting your sales going in a different direction. So all this you need to bear in mind when you do the budget. What is the stage of the industry? What is happening in the industry? Whether it's a downtrend, uptrend, or downtrend, or it's a new product. All that we need to consider when we do the budgets. Consider the industry that you are in. And of course, the past and the current performance of the company. So when you do a budget, it's good to have a few years trend with you. You're doing the budget, then you can see what is the trend of the sales and the expenses. So later on, when I show you the preparation of the budget, I will show you how we do a trend analysis and all. The last point I want to mention here is scenario planning. So what is scenario planning? So scenario planning is where you set a scenario. Okay, this is the first scenario. Sales, for example, goes up by 10%, and then what is your expenses and what is your profit and all that. So that is your budget for the year. So you plan to increase your sales by 10%. You have all your strategies in place. But what if things don't go as planned and you don't achieve your 10% sales? So then you need to look at, should I come up with another scenario? Maybe a second scenario where sales only went up by 5% instead of 10%. Maybe there could be a third scenario where your sales didn't grow or maybe even declined. So it's best to have a few scenarios when you do budgets, so that you know when your sales is not achieved, then you know what is your bottom line will be like. So you're prepared. That even when you don't achieve your budgets, you already have prepared the scenarios and you know what to do. For example, if your sales didn't grow, and then you need to know, then you know what need to be done. For example, you need to cut costs and all this kind of things. So have this kind of scenario plans ready, so that when it happens, you know what action needs to be taken. Right. Okay, so far everybody okay? You all understand?
Yep.
Okay, good. Okay, so this is the last slide that I have on budgets before we go into the exercise. Into the I'll show you a demo of how budgets are prepared and cash flows and all that. So in this slide, I just want to show you the budgeting process. So what is the budgeting process? So basically, the budgeting process is where you collate the budgets need to be collated. For example, the sales team will do the sales budgets. Then you have your procurement team or your production team will do the direct materials or purchases budgets, or direct cost budget, for example. And then you have your expenses, department expenses budgets. So respective head of department, they will do their own budgets. So if you have a finance team, so they will collate from the sales, from the production teams or procurement teams, and from the department expenses. So they will collate all the figures, and then they will then generate, the finance department will then generate the budgeted P&L, budgeted balance sheet, cash flow, and analysis and ratio. So this is how the budgeting process should be. For the reports that the finance teams should produce, at the very least, they should present a budgeted P&L and a cash flow. Those are the most important, budgeted P&L and cash flow. Even if they can't produce a balance sheet, it's okay. It's not that critical. But you should be able to see a budgeted profit and loss statement and a budgeted cash flow projection. So these two are very important. Because one, the P&L is for you to monitor your revenue and expenses. And the cash flow is to look at the funding requirements. How is the funding going to be the next year? Whether you need to raise additional funds and all that. Okay, so this is the budgeting process. Are you all clear with the budgeting process?
Yes, sir.
Yes, yes.
Yeah. Okay, so now it's about 9:05. So we will take a 5 minutes break. It's okay for all of you? We'll take a 5 minutes break. And we shall resume, we shall resume. Okay, now it's 9:06, so maybe we'll take a 5 minutes break. And let's resume at 9:11.
Okay, perfect. Perfect.
Okay,
Right.
just take a short break, huh? Back shortly. Okay, everyone back? Shall we resume? Yes. All right. So far, any questions? What I covered so far? Are you all okay?
Good, I'm good.
Tuan, ada soalan.
Ya. Yeah.
Oke, yang kos tetap tadi tuh kan, itu kos tetap untuk yang kita punya kos bisnis saja ataupun dia termasuk juga kos pribadi kita, macam kita guna untuk belanja harian ataupun belanja sekolah anak-anak begitu, dia termasuk ataupun tidak?
Tidak, tidak. Cuma kos untuk penjagaan saja.
Oh, oke.
Untuk penjagaan saja. Kita
thank you.
Asingan lah. Kalau campur semua sekali susah nak buat.
Oh, jadi dari sanalah batokan kalau kita nih kerja kita nih kira bekerja di company sendiri juga bahkan. Jadi kita ada gaji, itu kita punya kos sendiri lah kan. Jadi yang tadi kos tuh dia untuk perniagaan kita punya sajalah kos.
Perniagaan saja. Betul, betul. Kan Selisten ada syarikat kan, sedia kan?
Ya.
Cuma kos yang dalam syarikat tu yang di bawah syarikat tu, itu aja kos-kos dalam.
Jadi kalau begitu kan
tidak termasuk kos pribadi lah.
Ya, saya baru belajar bah. Jadi kalau begitu kan tahun depan saya perlu ikut ini pemula.
Ya.
Ya, ikut nih pemula sudah supaya saya tahu kan saya ini ada untung kah, ada rugi kah selama ini.
Okey, dah berapa lama Cik Selisten berniaga?
Saya lama sudah Tuan, tapi itulah tidak kira macam tiada buat macam ni lah. Tiada buat kira-kira begini.
Tidak buat lah, tidak tahu lah.
Tidak tahu buat, tapi ada catat juga lah, ada catat juga kita punya sale, kita punya apa keluar kos kita keluar masuk tuh kita ada catat juga semua lah.
Oke.
Ya, dan kadang-kadang sebulan tuh kita nih ada untung, kadang-kadang tidak untung, macam itulah.
Oke.
Jadi dengan ada pemula nih sekarang saya rasa saya boleh kasih stabil sudahlah saya punya ekonomi company saya. Lepas ni lah. Ya, habis tahu sudah. Thank you Tuan, saya dapat belajar sudah.
Oke, bagus. Yes, let's go back in. So this is done. Let's come back to this later, slides later. So let me open the worksheet now, the budgets. Okay, so what I'm going to do now is I'm going to show you how to do a simple budget. Just a simple budget P&L. And cash flow. So I've kept the things quite simple because all of you, like I said, are not finance people. I didn't want to complicate by putting in too many things too complicated. So it's quite straightforward in terms of the budget and the cash flow. Okay, let's look at the exercise. So you have been promoted recently as the manager of your retail store, and you have been asked to prepare the budget for 2021 for your store, including a cash flow projection. Senior management wants you to grow the sales by 30%. You also need to renovate the store to make it more attractive and estimate the cost will be about 30,000 ringgit. Renovation is depreciated over 5 years. Remember I talked about depreciation in the last program I had on, I think Saturday, I believe, under financial reporting. The depreciation is where you take the cost and divide it over the useful life, the estimated useful life of the asset. So in this case, a renovation is considered as an asset, and it is estimated, useful life is 5 years, so it's depreciated over 5 years. Now, 2020 performance was affected by COVID-19. Okay, so you will see later the performance of COVID 2020 has been down. So the past 4 years financial performance of the store are as follows. Okay, so first, we have the P&L statement. This is where I said, remember I was talking about you should do a trend analysis. So here, in this example, We have 4 years of results. That is 2017, 2018, 2019, and 2020. The first line is the revenue. You can see around 2.1 million to, but in it goes from 2.1 million to 2.5 million in 2019, but then in 2020 affected by COVID-19, so it's come down. Cost of sales is the cost of the goods that is selling. And then you got a gross profit. So your revenue minus cost of sales, you got a gross profits. And below here, I calculated the gross profit margin, which I already showed you how to calculate. I think on last Saturday. Remember, the gross profit margin is a gross profit over your revenue. You got a gross profit margin here, which the trend is 70% earlier, but for this business, the gross profit margin has been coming down over the years. From 70 now is around 66%. Okay. On the right here, you will see there is a trend, average trend. What is the increase, average increase from 2017 to 2019 and from 2017 to 2020? Now, the reason why I broke up these two is because 2020 results is affected by COVID-19. So if I take the average over the 3 years, you will end up with distorted figures. That's why I kept these two separate, so that you know that actually during normal time, the business was growing quite well. So revenue was growing 11%. And because of COVID-19, the average dropped so much. So similarly with the cost of sales. Okay. So this is one way to do a trend analysis. How do you calculate this? You look at the formula. I just take the one from here. I take the revenue from here. G14 is from here. Minus this. And then basically you divide it over 2 years, because basically you're actually looking at an increase over 2 years. Even though the period is 3 years, but you're looking at an increase over from 2018 over 2017 and 2019 over 2018. So you see that the average increase over the past 3 years is 11%. Basically, actually over these 2 years, increase of 2018 over 2017 and increase of 2019 over 2018. On average, is about 11% for revenue. And for cost of sales, the average increase was 17%. Let's go down further. And for fix this screen first. Let's say I fix the freeze the pane. Okay, so from here we can see, next we go down to the operating expenses. So we have staff salaries, rental of premises, repair maintenance, advertising and promotion expenses, stationery, depreciation, utility and telecoms, and sundry expenses. So this is the total expenses over the 4 years. Starts from 1.4 million and came down to went up to 1.5 million, but it came down to 1.45 million. Alban, are you there, Alban? Maybe you can just mute everyone. Interruption, okay. And here you can see the average increase. So the average increase for staff salaries was about 5%. Here you can see the affected because of COVID-19. So we ignore these figures. So we concentrate on these figures, the one under the 2017-2019. The staff salaries on average increased about 5%. Rental of premises more or less the same over the past 4 years. Repair maintenance went up by 6%. Advertising promotion by 12%. Stationery went up by 5%. Depreciation by 6%. Utility and communications 3%, and sundry expenses by 5%. So overall total expenses over the period went up by 4% on average. Over the 4 years, this company made profit of 72,000 in 2017, 197,000, but they lost money in 2020. So in 2020, the loss was 95,000. This is a profit after tax, after minusing the tax, 55, 150, 160, but lost money in 2020 because of COVID-19. Here is all the ratios, some of the ratios I showed you the day on Saturday. Net profit before tax margin. How do you arrive at that figure? You take this figure, your net profit before tax, and you divide it by the revenue. So for 2017, for example, you take the 72,000 and you divide it by the 2105. So you can see the formulas all here. So you got net profit before tax, you got net profit after tax, which is in the case of 2017, it is 55,000. Again divided by the revenue is now up there. 2105. So you got all the margins here, net profit margin, net profit and before tax and after tax. Now I've shown A&P over revenue. So A&P is this one, this advertising and promotion expenses over revenue. So I've shown it as a ratio. I'll explain later why this is a ratio is there. So overall, an average is 2.2%. Okay, except for 2020, where these two expenses, when these two lines, it's negative because of the loss. And then here below is the cash flow statement. So you can see receivables. Where do we get the receivable figures? Okay, in this assumption, I'm assuming everything is on a cash basis because it's a retail store. So retail store, you actually sell everything on a cash basis. So all this revenue here from the P&L statement flows to the cash flow. This cash flow projection, if you notice, is a bit different than what I showed you on Saturday, because this is called the direct method. This is a simple cash flow, just cash inflow and cash outflow. So receivables came from the revenue just now. So that figure we put it here. And all the figures that come here, actually is coming from the P&L statement. I just put it all into the cash flow statement because the assumption is everything is on a cash basis. So you will see almost all of these items here are similar to the ones on top, except for this line, trade payables. So where do I get the trade payables line? So for the cash flow, I cannot use the cost of sales because the cost of sales is the cost of goods sold, but it's not necessarily the amount that you paid that year because you could have had opening stocks and all that. So for that, this line, this trade payable line, what I did is, if you look below here, okay, I have a movement of inventory. There we have an opening stock, purchases, less cost of sales, and closing inventory. Cost of sales comes from the P&L statement. And then this purchases of inventory here. So this figure is what I show in the cash flow. But this is what I actually paid. So it's not the cost of sales, but what you actually paid. Okay. So your cash inflow less your cash outflow, get a net cash flow. You will notice one item here, capex. Capex means capital expenditure. And you will notice another thing is in this cash flow, there is no depreciation. See the depreciation here? This figure. It doesn't appear in the cash flow. The reason is because depreciation is a non-cash item. Remember earlier I mentioned it is just a computation. Just take the capital expenditure divided by the number of years. So there's non-cash. It's a non-cash item. So what you need to put in the cash flow is if you have had any capital expenditure. So in this example here, over the 4 years, there was one capital expenditure in 2019, which is 25,000. So that appears in the cash flow. So you have your net cash flow, which is a cash inflow minus cash outflow. The balance brought forward is the balance cash brought forward, and this is the ending cash balance. 4 years. Okay, so everybody understand this point before I start with demonstrating how to do the budgets. Any questions about the financial statement and the cash flow statement? The cash flow projections?
Yep.
All okay, yeah? All follow, huh? Okay. Let me just unfreeze the pane again. Let's look back at what is it that the senior management wanted again. So if you notice, the senior management wants sales to grow by 30%. That's what they say. So this is the year after COVID, next year. So your job is as a store manager now is to achieve a sales of 30%. So of course, the question you need to ask is, do you think you can achieve a sales of 30%? But this is again what management wants. So remember I mentioned about scenario planning. Scenario planning is where you have more than one scenario. Okay. So that's something you need to bear in mind, the scenario planning. So now we put the scenario planning aside first. Let's do the budget first based on what is required. What is required is they said they want a sales of 30%. Let's now do the budget first. Okay, let's start with the budget. So this one, the sales is 30%, increase of 30% from 2020. So what we do is, your sales for 2020 is 2054, just say round it up to 205. 30%. So your sales is for 2021 is 2.6 million, 2.67 million. Your cost of sales, the assumption is you're using a same gross profit margin of 66%. That's why you see the cost of sales is 908. Because I just assume that it's same margin. That is your cost of sales is 34% of your revenue. So you get a gross profit of 1.76 million. Everybody follow at this stage? Any questions? Okay, all okay. It's revenue minus cost of sales, you get gross profit. Huh? So now let's look at the expenses. How do we budget for the expenses? So you see the trend here. We can use this figure, 5%. For example, for salaries, the trend over the average trend is 5% increase. It depends on whether you want to follow the trend or if you have a specific salary increment for the year. If you already set, and then you use that salary increment. But say if your salary increment is 5%, so let's assume it is 5% for this case, in this example. So what do? We just take this figure, 800, increase it by 5%. So that is going to be your staff salaries. For rental of premises, we assume it's no change. It's 1,000. For repair and maintenance, on average, it goes up by 6%. So we take this figure and we multiply by 1.06. So this is your repair and maintenance. And you will notice that advertising and promotion, the figure is already there. That is because, remember just now I showed you the ratio. There is an advertising over revenue ratio, right? 2.2%. Advertising and promotion cost over revenue ratio. So in this example, what they are doing here is they assume the spending of the advertising and promotion is based on revenue. That means they normally use 2.2% of revenue. So that's why if the revenue is that much, 2.6 million, automatically you'll get a figure here. So you can spend this much, 59,000 for advertising and promotion because it is based on a percentage of revenue. Stationery, okay, stationery is on average has grown up by 5%. Similarly, you just use this figure and you assume it goes up by 5%. Now depreciation, okay, depreciation is a bit more complicated. Currently it's about 45,000. So normally depreciation is the fixed cost. But earlier, if you look up at the beginning of the example, mentioned that the store manager needs to renovate, do some kind of renovation. And he estimated the renovation cost to be 30,000 ringgit. Remember 30,000 ringgit. And the renovation is to be depreciated over 5 years. So if you take 30,000 and divide by 5 years, you actually get 6,000 a year. So assuming he renovated at the beginning of the year, that means the depreciation cost is going to go up by 6,000 in 2021. So if you spend the 30,000 in 2021 at the beginning of the year, the depreciation is going to go up by 6,000 a year. So let's assume he does that. Therefore, his depreciation, he has to add the 6,000 to the 45,000 because his depreciation is going to go up by 6,000. Means 45,000 plus 6,000. So this is the depreciation for 2021, 51. Utility and telecommunication, okay, we assume the same. It goes up by 3%. Sundry expenses, we assume go up by 5% based on the trend. Okay. So finally, we have the total cost figure, which is 1.5 million, and you have a profit figure, 256. It means you take the revenue of 2.672 million is now minus cost of sales. You got a gross profit of 1.76. And after you minus all the costs, you get a profit of before tax of 246,000. Minus the taxation, you end up with a profit after tax of 187,000. This is all your margins. Okay, everybody okay at this stage? You all follow? how I constructed the budgeted P&L?
Yes.
Understand? Huh? Okay, so far so good. Huh? Anybody got any question at this stage? None.
See, he's eating banana with the skin.
Okay, now we come to the cash flow projection. How do we do the cash flow projection? Okay, we'll notice the cash flow projections because there's some formulas in there. So it picks up most of the figures from the P&L. So the revenue figure is here, 2.672 million. It already appears there straight away in your cash flow statement. Similarly, all the expenses from the P&L actually appears here, except for two items: trade payables and you got a capex. Let's tackle trade payables first. Because remember, trade payables, I said mentioned earlier, you cannot take the cost of sales because the cost of sales is not what you actually paid for the year. So we have to go down and look at the trade payables. That is basically the inventory. So the brought forward inventory is 157,000. It comes from here. Closing inventory becomes the opening inventory for the following year. Just now you saw the 908 cost of sales. It comes from the P&L statement. You go up here again, back to the P&L. You will see there's a cost of sales of 908,000 here. So that figure, I've put it down there. So that is the cost of sales. Opening stock is 157. You got cost of sales 908. So you need two figures here. You need the purchases and you need the closing inventory. So let's assume they want to maintain a certain level of purchases. I mean, certain level of inventory. Let's assume that the inventory is about the same as 2020, roughly about 160,000.
Yes, sir. Ishan is a good guy. Naughty guy. He wants to destroy the cake. No. He wants to eat the cake. That ice cream machine.
I think, Alan, you need to. You can mute everyone again.
All right. Nerf gun game 14.
Yes, that was a good guy cake.
Okay, so assuming the Alan, are you there? Alvin, are you there? Can mute everyone. Disruption. Okay, so the closing inventory we said is 160, right? So if the closing inventory is 160, that means you work it backwards. First, you have your cost of sales, you have your closing inventory of 160. So you take your 160. Your closing inventory, you decide to put it at 160. Closing inventory 160. Add your cost of sales of 908 and you minus your opening stock. Just say 160 is your closing inventory. You add your 908 is your cost of sales, you minus your opening stock of 157. So you need to buy 911,000 worth of inventory in order to have a closing inventory of 160,000. This figure of 911, then put it here, the trade payables. So that is the amount that you paid, that you have to pay. This is the amount you have to inventory you need to buy next year. The last item on the budget is, remember, the capital expenditure of renovation for the store of 30,000 ringgit. Put that inside. So that completes the cash flow statement. So if you look at the cash flow statement, you're expected to get a revenue of 2.67 million. And this is all the costs you're going to pay next year, including the renovation of 30,000. And that's going to give you a net cash flow of 205,000. And this 409 comes from here. Notice the closing balance of the cash here becomes the opening balance of the cash here. And finally, your closing cash balance is 614. Okay. Everybody understands here? Does everybody follow me so far? Understand how I constructed the P&L statement and the cash flow statement?
Yes.
So this cash flow statement, if you look at it, it's quite a simple format. It is good if you can get your finance team to prepare this kind of cash flow statements. Ask them to do it for monthly, do it on a monthly basis. If you can do it on 12 months basis. So what happens when you do it on a 12-month basis? This kind of cash flow projections is very good because you can see how much of cash you're expected to get and how much is the expenditure in the next 12 months. And then from here, you can see, if you look at this cash flow, the net cash flow, then you can see whether your net cash flow is positive or negative. So in this case, for example, when we look at the year 2020, you notice that the net cash flow is negative because they lost money in the year. Earlier, in that year, if you look at the P&L statement, they lost money, the store lost money by 95,000. And similarly, in the cash flow statement, it also shows negative cash flow, 72,000. So if you can get your finance team to do this kind of cash flow statements, simple cash flow statements, monthly basis, and ask them to project it maybe 12 months ahead. Then every month you take a look at the cash flow. So you can see a few months ahead already. You look at your net cash flow and see any month your cash flow is negative. And whether you have sufficient funds, or is that by doing this cash flow statement, you can see going forward whether your business is sustainable, whether you have enough cash, at what point do you need funding. Because if you do it on a monthly basis, you can see at what point they say your cash flow goes down. And at that point, you need to know whether you have enough cash, whether you need to go and borrow money or raise funds. So a cash flow statement is very important. This kind of cash flow projections is very useful. So try to get your finance team to do this you can follow this kind of formats, simple formats. Instead of following the one I did on Saturday, that's an accounting format. I don't use that format for projections, for planning purposes. Use this format. This is a simpler format to do. Ask your finance team to prepare this kind of cash flow projection. Very easy to understand. And you can help you to monitor your business. Okay, now that we have done the budgets, let's look at the point we were trying to talk about, scenario planning. Hide these two columns. Okay, now it's about 9:40. I don't know whether you all want to try this scenario planning. See, under the scenario planning, what happens is we assume that the revenue is down by 5% or 10%. That means you don't achieve your 30%. So it's reduced by 5%, for example, in 2021. That means you only achieve 25%, or you only achieve 20%. So what happens? Your revenue is at this level. We need to fill up all this, complete this page.
The rest doesn't change, right? Except for probably the cost of goods and all.
You're right. Yeah, cost of goods changes. The rest doesn't change much. It's more or less the same. The other figures are all more or less the same. Only the revenue and cost of sales is the main one that changes. Only thing I want to ask is because there's only 20 minutes left. I'm not sure whether you all have enough time. I can send it to you all if you want to try it out. That means I send it to your WhatsApp group, and then you all. But I don't know whether all of you are on laptop. Are you all of you using laptops? No.
I think most of us are, because that was one of the prerequisite.
Anyway, I'll just send it in case you all want to try it.
Yeah.
I just send it first. Then
we can do it and send it to you in the WhatsApp group, so you can just check, right?
Can you do that as well?
Okay. Some are on mobile, so it looks like only those with laptop will be able to do it.
Will be able to do, yes. Those who are using laptops will be able to. Data. Let's see. know why this can't go through.
You want me to assist you, Mr. Ragesh?
Maybe I email it to Alban. Is it to you, Alban?
Oh, you can WhatsApp me. You want me to share it? Is it?
Yeah. I tried to send to WhatsApp, but it doesn't seem to work. I don't know why.
Okay, email me. You email me.
I email it to you now.
Boleh, Tuan.
Ya.
Boleh share kan nanti yang cara pengiraan dia ni setiap tahun.
Alban, this is the one, right? Alban Visuaria.
Yeah, that's the one.
Okay, send you. Okay, check and see. Have you got it?
Tuan.
You send again to Alban at businesswarrior.com.
Yes, that's right. Is that the one?
Okay, sure. I'll check. I'll send it.
Just
you want me to
post it.
share it in the chat group, is it?
Chat group is again WhatsApp is right. Share it both.
Ada send juga di grup Tuan. Nanti kita boleh praktikal lah buat.
Yes, I can share.
Yeah. Tapi kalau tak pakai laptop susah lagi lah. Kalau handphone susah nak buat.
Ya betul. Saya terpaksa belajar lah laptop saya sana.
Okay, dapat.
Saya ada komputer juga, ada laptop tapi saya tidak pandai guna. Mau kena belajar.
You manage to get it, Alban?
Kalau begini Tuan, dia punya sale setiap tahun ni kan saya nampak macam dia ada turun, dia macam tu. Setiap tahun dia turun saja.
Dia punya revenue, bukan revenue naik, tapi turun dalam tahun 2020. Sebab dalam tahun ni saya tunjuk sebab COVID-19 dah dia punya jualan sudah turun.
Ya, dia punya dia punya jualan turun lah kan. Macam tahun ini semua dia turun.
Ini dia turun lah. Lepas tu naik balik lah. Tahun 2021 dia naik balik.
Dia naik balik lah begitu. Sebab kami setiap tahun kan kami dipantau juga sama kerap tangan Malaysia sebab kerap tangan saya di bawah under kerap tangan Malaysia. Sale kami setiap bulan dia akan pantau lah. Dia akan kira kami punya sale setahun dan beberapa tahun ni kami ada rekod dia lah.
Okay.
Mr. Ragesh, just a question. The revenue work that you are asking us to do, the reduced revenue of 5% or by 10%. So this is the reduction from the budget, the original budget of 2021,
budget,
right?
yes. From the base case, I call it base case.
Okay, all right. So the original budget is called base case.
So you reduce it from the base case.
And the two is called the scenarios.
These two are scenarios, yes. So these are.
Right.
So this is, let's say. The scenario 1, scenario 2. You managed to get the file, Alban? Alban, are you there?
Yes, I got the file ready, so I'm sending it on WhatsApp now.
Okay, you're sharing it.
I'll send it. I'm sending it in the WhatsApp group.
WhatsApp group, lah.
Yes,
okay.
The WhatsApp group.
Either way.
So can you all check the WhatsApp group? Training on budget worksheet, right?
Yes, that's one.
That's the one, right?
Yes.
Okay, I have sent it to the group chat. So semua orang tolong tengok group chat.
Yeah, I got it.
WhatsApp.
You all got it? All of you?
WhatsApp group.
Got it. I think the problem is just look at the worksheet. I think maybe it could have been hidden. Just unhide it. Maybe when I send it, I forgot to unhide it. What do you do? You just unhide the, you all know Excel, right? Just unhide for column L and M. Just do an unhide, then the two columns will be revealed. I think when I send the worksheet, maybe I made a mistake. I forgot to unhide the columns. So what you all do, actually, you just need to key in the sales figure. That's the main one. The rest is more or less the same as this. So you just copy everything in the same. Just do the revenue and operating expenses. Just do the P&L now. Don't worry about the cash flow. For those who can try, or whoever has laptop, those who don't have, is okay, no problem.
The one that we received doesn't have the base case budget.
No, the base case is there, but I think that these two columns are hidden. What you can do is just unhide it.
No, I mean the scenario columns are hidden and the base case is empty.
Oh, it's empty, yeah? Oh,
yeah.
Okay.
So I think you have to save this file and send us the...
Maybe I send you another file.
I've also sent the file in the chat room. You know, in Zoom, there's the chat room, right?
Yes, yes.
Kalau tengok dekat chat room ada tak?
No, Alban, I'm saying the file came without the base figure.
Base case is not there. Let me just send it.
Okay.
So we have to get the base case scenario one.
Let me send it to Alban first. Okay, Alban, I'll send you the revised one.
Okay, I will check and send it again.
Sorry about that. I didn't realize that I sent you the earlier ones. This time should be right.
I haven't received it, Mr. Rakesh. Okay, just got it.
Yeah, today I know the internet is a bit slow. The internet today.
Okay, I have sent the Excel sheet in our Zoom group chat, and I will also send it in the WhatsApp group chat.
Oh, okay, so in the Zoom, that's okay. So you can try in the Zoom one. Yeah, it's there. It's in the Zoom. You can try it already. For those who are for laptops, you can open up the Zoom.
It's also in the WhatsApp group chat.
Yes, it's also there. Yeah, I got it. I'm sure all of you got it. Those who have laptop can try it and see. So what do you do in scenario 1? You just reduce it by 5% based on the base case. That means based on this 2021 figure of 2672. Just take 95% of that key into this column. And here it is down by 10%. You all managed to access the file? Denny, you managed to access the file?
Yes, Mr. Rakesh, the file is good.
Good, huh? Okay, I can do it.
Yeah, I just managed to download it. Thanks.
Okay, cool. I got it.
Yeah. All right,
Yeah, with scenario 1 and 2.
Okay. You try the key in the sales figures first. The cost of sales will calculate by itself automatically. The formula is already there. Okay, everybody okay? You all managed to get it? Okay. So what is for 2021? What is the revenue figure you need to key in? For scenario 1, under scenario 1, what is the revenue figure you key in? Reduced by 5%.
2538.
Yes, that's right. Huh? So you do
2538.
this. 2538, huh? Right. And for here, what is the figure you key in?
$863.
Yeah, 863 is your cost of sales. I'm sorry, calculated automatically because there's a formula already there. You'll write the scenario 2, reduced by 10%. It is from 2672, reduced by 10%.
2228. Cost of sales 758.
For for scenario 2. What is the
Scenario
revenue?
2. Reduced by 10%. 2228.
Yeah, it should be from here, 2672, just times.
2404, right?
It's 2404 actually. Just take this figure, you times 90%. It's 2404. If any got it correctly. Got it, huh? Understand?
Correct.
Okay. So here the rest is very simple because it's actually you are going to assume the same.
Sorry, I cannot get it. Sorry. Can I just have a formula for M14? Yeah, L14 also. How you get it? Because I delivery minus, so I get the figure wrong.
So if you look at this, if you look at my screen now, you're looking at
Yeah.
L14, right? If you notice L14 is equal L14 is K, which is this figure. Okay, I'll show you again. Huh? L14. You go here, K14, just multiply 0.95. This is the formula.
K14
times 0.95.
0.95. Oh, because the other 5% is the reduction lah.
Reduction,
Now correct. So the next one will be K14, okay, and then times by 80%.
90%. Because down by 10%.
90. 0.9. 0.9. Oh, okay.
0.9, yes.
No wonder because I received another 2 or 3 more zero behind.
Oh, it's a formatting line. Sometimes Excel, just ignore the zeros behind.
Yeah, I get it. Thanks.
Okay. So the rest you can just assume the same as here. So what you can do is if you want to populate it, just populate it assuming it's the same as the base case. So you just follow the same as the base case. But it is actually up to you, entirely up to you. You're doing it for yourself, for your own business, and you do the scenario planning actually. You can also consider if your revenue is down, maybe some costs you need to cut. So then in the scenario planning, you can put it there. What cost you can cut. But in this assumption, of course, we're assuming that all the costs is the same. And remember the A&P, it follows the sales. The moment the revenue goes down, the formula is 2.2%. So automatically it comes down. Therefore, you notice for this year, if the revenue is down by 5%, then the profit drops from 246,000 to 161,000 because the revenue has dropped from 2.67 million to 2.53 million. And similarly for this scenario 2, you assume the same. Just assume everything is the same as.
How about the cost of goods? That changes, right?
That changes because I had a formula already inside. Based on the ratio, the margin.
Sorry, cost of purchase.
That will change. Yes, you're right. Later on, when we look at the cash
flow.
flow.
The expenses, general expenses, we just populate exactly the same from the budget base case.
Yes, you can just follow this. You can just follow the base case. Yeah, just follow the base case. The A&P will change by itself.
Yeah.
Okay. And then when you look down at the cash flow, the only figure you need to key in is there's 2 figures you need to key in. The one is the capex. Capex you can assume the same.
Okay.
Same. It's only this part, the trades payables, purchases. Go down here. Similarly, how we calculated this now? Assuming you want to still maintain a 160.
160, correct.
So you want to maintain the 160 closing stock. So you get.
How did you get that figure again? 866.
So you assume the closing stock is 160. Okay, show you again. Huh? So you assume your closing stock is 160. Then you add your cost of sales. Your cost of sales, remember here is 863, right?
863.
So you add your cost of sales, 863. Then you minus your opening stock, which is 157. If you notice above this cell, the top cell is 1.
Right. So the minus the top and bottom.
Right. You add the bottom, the cost. You take the closing inventory, you add the cost of sales, you minus the opening inventory. That's how you get 866. And here, similarly, you just take 160. Add the 817 and you minus the 157. You get 820. And then you just transfer that figure there. 820. You just. Okay. That completes the cash flow. You see that the net cash flow drops. The moment the revenue drops, it's from 205, it drops to 140,000. In the scenario 2, you only get 76,000. Okay, everybody okay? Everybody followed or what we went through? Those who had a chance, maybe we can try it out. Anyway, you can always try out this worksheet at home. And then, of course, when your convenience. At the same time, like I said, you can get your finance team to actually do the cash flow projection. That'd be good. What I've showed you today is it's like a mini financial modeling. Just a short exercise on financial modeling. So you can do some simple financial modeling on your own. How to do some scenario plannings. So when you do budgets, when you do the budget, don't always stick to only one budget scenario. Have a few scenarios. Because there's no way we can predict anything with any level of accuracy. So if you put a target, we don't achieve a target, then you should have one or two scenarios. So then you can what things you need to do. Then you already can see what will be the profit or loss if it is lower, and maybe you can take some steps earlier. Say the first 3 months, the trend is not going that direction, and then you know, okay, it's going down by 5 or 10%. Then maybe I need to do something. I need to boost some promotion, advertising promotion. Oh, I need to cut some costs. So that's how you can plan your business accordingly. Okay, everybody okay? Any questions at this stage? You all okay? Any comments? All good. I'm not sure how many of you managed to try, because for those who have the laptop maybe or desktop. Okay, all good, eh? Okay, if all good, we have done the budgets and the cash flow already. So let's now go back to the slides a bit more. Let's wrap up. Okay, so that is now we prepare the budget and cash flow projections. What are the key takeaways today? We went through. So in terms of break-even point, so it's important to know how to compute the break-even point, so that enable the business to know how much of the product or services they need to sell to break even. So it was important that we went through all that just now, so that you can know, you all know how much to sell your product and services to sell in order to break even. Budget is an important planning and control tool to monitor the performance of a business, as I mentioned earlier. And most importantly, cash flow projections are useful in managing a business cash flow to enable the business owners to know when they need to raise extra cash to fund the business. So try to have these cash flow projections done. Get your finance team to prepare them for you on a monthly basis. Do a 6 months or 12 months. The best is to do a 12 months projection. Do it for the whole year and get them to update it every month. So you can see your projections, your cash flow projections at least 12 months ahead. So you can plan accordingly. Plan in advance. Okay. Any questions at this stage? Any more questions? Okay, so I think we have come to the end of the program. Any of you got any more questions?
So I guess just a quick one. For small companies, right? How often do you think we should do the cash flow? Like, for big organization, I notice they require, like, especially for FDI companies, we usually do it like once a week or bi-weekly. So for small companies, do we do that monthly basis or how?
Monthly is fine. We can do it monthly as well. I think just update it every month is fine.
So it's obviously every end of the month for the following month, right?
Yes,
or
that's
begin,
right.
Yeah, end of the month for the following month.
For the following month, yeah. That's fine. But normally when the time you get the report out, probably will be in the following month. Because normally finance will take you about 1 or 2 weeks to prepare the report. So you probably will get it in the middle of the following month. Depends on how fast your finance team churns out the reports.
The cash flow is after or before? Before, right?
Cash flow is normally done after they've done the P&L and all that, profit and loss statement and all that.
for a particular month.
Yes, that's right. Because normally what happens in a cash flow statement, when we do the cash flow statement, even the staff, for example, what we do is we update the actual columns.
Okay.
So, for example, now you are in a particular month. They say you started in January, then after that you are already in March, for example. So the way they should do the cash flow statement projection is, you should have January and February actual figures.
Right. So
Then
this is
January, February, and March onwards is all projection.
okay. So I think the cash flow that I generally prepare is forecast, cash flow,
Yes.
projections for future expenses.
Yeah.
So the general cash flow is done on previous month, is it?
Yes, that's right. The actual cash flow is done on previous month, but it's good to have both the actual and the projection together, so you can see the trend of the actual as well as the projection, so that you know that your cash flow projection is close to your actual.
Okay.
Because if you don't have the actual figures there as you're doing the projections, you're not sure whether your projected figures is reflective of the actual trend. You know?
Yeah.
So make sure you have both actual and the projection figures.
Yeah, that's what we generally do. So, but the only thing is, ours focuses more on the projection.
Projection, yeah, of course. The idea of the cash flow projection, of course, is to look at it.
But that's again, that's for big corporations.
Big companies.
But for the startup company that I'm looking at, your recommendation is to do it on a monthly basis.
Yes, it's important to have like a 12 months cash flow ahead.
Right. Okay.
Cash flow projection is one of the most important reports that you can keep. Very good for planning purposes.
Got it.
Okay.
And can we have the slides, please?
Pardon?
Can we have the slides later, please?
Oh, yeah, sure. Definitely.
Okay, thanks.
Yeah, Mr. Rakesh, can I have the last slide, the key takeaway? Just have a look at that. I just need to screenshot that.
Sure.
I'll
send the slides to all of you.
Okay, can, no problem. Thanks.
Yeah.
Yeah.
Sorry, I didn't share screen. So you wanted to see the last page, right? Be sure again.
Take away. Yeah, that's great.
Thank you. I forgot. I already stopped sharing. Okay. Yeah. Okay, got it.
Yeah, got it. Thanks.
Okay.
Thank you.
That's all right, huh? Okay.
Yes, sir. Thank you very much.
Okay. Any other questions? Anybody else? Any other questions? All clear? Huh? Okay. Anyway, if you still have any questions, you can put it in the WhatsApp group. I'll be more than happy to answer any questions you all may have. I hope you all found today's session informative and useful, and learned something new if you have not done this before.
Absolutely.
Okay. All right. Is anything else? Then Albert, maybe I pass back to you. Mike back.
Okay.
Back to you.
Oh, yeah. Thank you so much, Mr. Ragesh. Thank you for today's wonderful session on cash flow projection, budgeting, as well as
break-even.
Sorry, break-even point. Yes. Yeah. So these topics today that were shared, this is actually a coaching session, right? And I just want to let everyone know that the coaching session is not just this 2 hours. It's going to be continuous, and that's why we have created a group chat. So here's what we want to do. You see, Mr. Ragesh is a very committed trainer, and he does what he does for passion, and he wants to really help out everyone. So what I would like to make a suggestion is, throughout this period of 2 weeks, right, of total trainings that we have, I want you guys to try out, because you see, as you have seen this year, okay, something really unexpected happened. Okay, so when COVID happened, what happened was everything went haywire in terms of budgeting, in terms of whatever money that you have put aside for whatever business expansion plans, whatever it is, it all had to be exhausted simply because there was an emergency that came in. And we did not anticipate this emergency. So therefore, probably the sinking fund was not preempt. So that is why this topic is very, very important, very crucial. And for you to really succeed in your business, financial planning, budgeting, break even, especially cash flow projection is very important. So what I want all of you all to do is I want you guys to actually start to try out all that has been taught and shared today. You all have the Excel sheet that I've shared. So please try it out. Please try out. And now is year end. So it's the most perfect time for you to start your budgeting for 2021, right? So Mr. Ragesh, is it okay if everyone could actually probably share their budgeting? If it's not personal, confidential,
just want to share. Yes,
you can share. You can ask any questions throughout this period of time, and just post your questions in the group chat. And Mr. Ragesh will be most happy to assist all of you all.
Definitely, sure.
So he has his fullest commitment. I want you guys to be committed to your business and to yourself and to this program. So that is why I urge all of you all to try out and just ask any question. Kalau tak faham, kalau nak bantuan yang selebihnya, okay? Ataupun apa-apa yang kurang jelas, tolong tanya dalam group chat dan Encik Ragesh akan tolong jawab. Right? Please? Good?
Sure.
Okay, so guys, that's a wrap for tonight, and we'll be seeing you on Saturday, which is Mr. Sam's session, Shamsul's session on technology and innovation adoption, and Sunday is digital marketing and digital sales. So you don't want to miss this weekend session. Also, please be on time, all right? And we'll have a great session on Saturday, okay? So thank you all so much and have a wonderful
everybody.
Good night.
Good night, everyone. Good night.
Thank you so much for your session today. Thank you.
Sure, thank you very much.
Thank you.
Bye. Good night. Bye.
You all.
Thank you so much. Bye.
Bye. Good night.